The ripple effects from the closure of BCL copper and nickel mine in Silibe-Pikwe continue to be felt far and wide. As the second largest private sector employer in the country, it meant that the livelihoods of its 4,200 strong labor force and their families were compromised. Businesses big and small, schools and other entities that make up the town of Silibe-Pikwe have their futures hanging in the balance. Botswana Power Corporation also felt the brunt of this closure, since the mine was a consumer of almost 20% of total electricity usage in Botswana, or more directly, 43% of BPC's own power generation. Banks experienced the spike in impairments due to unsecured facilities extended to the mine directly, mine employees, and other related companies linked to BCL. Adding to this long list of adverse effects is the court action that the world's leading nickel and palladium producer, Norilsk Mining, has taken up against the BCL group that threatens Botswana's reputation as a top mining investment destination. Norilsk alleges that for the BCL group to pull out at the last minute during their financial troubles and liquidation of a $270 million deal to purchase its 50% share of Nkomati mines in South Africa is unfair and reckless business practice. We look at the questions raised by this development with the help of independent audit, tax and advisory firm Grant Thornton, asking, is it common for a board of directors to be sued, and how liability is established in these cases?
The board is responsible for setting up the strategic direction of the company. Now, the implementation of the direction is more of a management's responsibility. So what happens? The board sets up an audit committee to oversee the operations of the management. The board sets up an internal audit team in terms of reviewing the operations of the management to see whether the internal controls are in place, are indeed working, are the numbers which are reflected realistic. And the board are encouraged to deal directly with the auditors, to the audit committee deals directly with the auditors to find out whether what is being reported are indeed right, to get that comfort. It's a matter of not checking, nitpicking and things like that. It's just a matter of making sure that the oversight function is effective. So when there is this independent oversight function, and it's very important that the members on the board needs to have the right kind of skills to be able to do what they expected to do. So it's more and more becoming a requirement that the requirements of each and every member of the board is stipulated, and the person who comes in will have to ideally ensure that they are meeting the requirements. In fact, what's coming up very soon in Botswana is there could be even a situation where there could be a scenario where the board is being reviewed by an independent body to see whether the board is adequately constituted to achieve the objectives of the board.
Do you have any advice as to best selection of board members? You already insinuated that capacity is becoming more and more of an important factor in this process, but do you have any advice you can give our viewers?
The first thing is it's very important that the company comes up with the requirements of what kind of skill sets is needed, and then once at least you're clear of what is the requirements of each, if it is going to be the operations director, or if it is going to be the finance director, any role for that matter, if the requirements are clear, we set the first level right. Then comes, as far as the directors are concerned, it's very important to be practical to say on how many number of boards are we sitting in as a director. And that limitation also has to be looked at. If we're sitting in too many boards, the level of concentration gets reduced. But on the other side, we do have a challenge where we do not have adequate number of people. So that way it is a balance which has to be struck. But it's very important to make sure that the requirements are very clear and to ensure that the directors who have chosen do have the time and are able to provide what they're expected to do to the board. It's very important to have the necessary skills and the time for successful rendering of their responsibilities back to the board.
In the case of gross mismanagement, where a shareholder is very displeased with maybe reckless investment practices or whatever the case may be, would the entire board be held responsible, or would it be the executive members of the board who would be held responsible, or would it be the non-executive? Would anybody be excluded from that process?
The nice thing about it is the board is responsible. So it's quite important for each and every member of the board to be aware that if somebody else makes a mistake, you can't just like that get out of it. So it is a joint and several equation where all the directors are jointly responsible for the outcome. Yes, there could be a specific instance where there could be an investigation which could be linked on to a specific individual who's responsible for a loan. That's a separate matter, but responsibility is indeed a complete responsibility. The shareholders, the stakeholders do appoint the board with an overall governance in mind, not to specifically alienate and say it's one person's responsibility and not others. So it's quite important to be clear that it is a global responsibility to all the shareholders and stakeholders.
So the buck stops with the board, regardless of what is happening on the ground, it stops with the board.
In our country, it's quite important, whether it's a listed company or a small company which is setting up, it's quite important for the business owner to understand that the role of a director is extremely significant. The importance in terms of internal control, importance of being awareness of the risk, importance on compliance to the statute is all something extremely important. At what stage do we take the decisions? At what stage we invest on these things has to be right from the word go. The tendency to say we will do it tomorrow, it's highly risky. It cannot be afforded even by a small company. So I would recommend that for any company, be it a small, medium, large enterprise, the investment on this oversight is quite important. It could be at the level where they are. It need not be that you need to constitute a huge board, of course, when you're a small company. So that is applicable to every business. Let's not think that it's not applicable to us at this stage. It's universally applicable to every company I can think of in Botswana.
What is the future of help? It's to help people find the great in themselves. The drive, the passion. Help them find their true potential. Help them stretch. Help them grow. That's why we help people help themselves, help the world, because a little help goes a long, long way. FNB, how can we help you?
Tonight, we first discuss probably the biggest change facing the local insurance industry, that being the regulation changes that are currently being implemented. Speaking with the Chief Executive Officer of the Non-Bank Financial Institution Regulatory Authority in Bifira, Oaitse Ramasedi. We begin with a look at some of the regulation changes taking place in the local industry.
Insurance Industry Act, which was passed in 2015, is not yet in effect. It's pending the development and finalization of regulations. That said, what the Act is bringing in is to align our way of regulating and supervising the industry with what's happening internationally, being what is called risk-based. Some of the points that are new in the Act are that instead of having base capital for all insurers being 2 million pula, we have changed that. It will be 5 million pula for short-term insurers and 10 million pula for life insurers. Another change that's coming in and is going to affect the where the brokers actually collect and remit premiums to the insurers is that when the brokers receive the money from their clients, they have to send it to the insurers. Currently, it's the Act says 60 days, but one can actually do it up to 90 days. In the new Act, it will be 15 days to a maximum of 45 days. Those are some of the highlights in the Insurance Industry Act.
Do you anticipate any challenges in the implementation of these, or maybe any blowback? How receptive has the industry been?
In terms of the 2 million pula being increased to 5/10 million pula, I don't anticipate any challenges. The industry is already aware. Our insurance players are already on the 5 million plus mark anyway, so they should be fine. Where there could be some adjustments are on the 15 days to 45 that I talked about. We do know that the finance managers of the entities involved would probably have been planning around the interest that they would earn when they receive the money today and only remit it over after 90 days or around the 90th day. So that means that they have to now know that that interest will be earned not by them, the brokers, but now by the insurers. Whether there'll be blowbacks, pushbacks around that, I wouldn't rush to say that there'll be that, because in terms of the money, it actually belongs to the insurers. It's just being collected by the brokers on behalf of the insurers. So it's really to say move money quickly to its rightful owners.
These new changes, are they informed by international practice or by how did they come about? And are they set in stone? Are they still up for discussion or not?
The changes, there are two levels in terms of these changes. There would be the actual act. The law has been passed, only that it has not yet commenced some signature just to say we start using it from today. So it has been passed, and for that it means until the law is changed again, call that being set in stones. When it comes to the regulations, we look at what's being practical. Once we start the implementation and what can't work, we can always go back to the minister to say, Honorable Minister, we thought this will work, it's not working, consider changing it. The law is passed by Parliament, the regulations are passed or promulgated by the Honorable Minister. But I would like to say to my colleagues in the industry that let's try this first. Let's not repel if that's what's coming before we see what can work or cannot work. Your question was what informed the changes. The changes are informed by both what's happening in the international arena and what's within our landscape as a country. So we took those two and then we said this is what will work in Botswana.
That concludes our discussion with Mr. Ramasedi, but do stay tuned. There's lots more headed your way.
What is the future of help? It's to help people find the great in themselves. The drive, the passion. Help them find their true potential. Help them stretch. Help them grow. That's why we help people help themselves, help the world. Because a little help goes a long, long way. FNB, how can we help you?
Thank you for staying with us. The changes in insurance regulations that we spoke of previously in tonight's program are necessitated by increasingly sophisticated systems, markets, and product offerings that characterized this age. Part of this sophistication is the increasing migration to electronic platforms witnessed across the board. But in this era of improved efficiencies, the Internet of Things, big data and all, the threats are new as well. Cyber attacks and hacking have become one of the biggest security concerns that companies of all sizes now have to contend with. When a company is electronically hacked, not only can it lose business by having its reputation tarnished, but through a number of possible factors. There is the cost of restoring systems. There is the loss of revenue while systems are down. Clients can sue if the company is found to be negligent or liable. And there are thousands, sometimes hundreds of thousands of stakeholder relationships that must be maintained simultaneously in the aftermath of a breach, often resulting in staggering notification expenses. These are risks the insurance industry has begun to address.
Cybercriminals go after one of two things. Predominantly, it's money, or they go after information. Now, everyone can understand why they would go after money. If you pull it straight out of a bank account, that's an easy theft for you. The other thing which people struggle to understand is how valuable raw data can be. So hackers will go after the data sitting in an organization, and you can use that in multiple ways. The first is that if you have enough data, you can falsify someone's identity online. So you can fake a passport, you can fake a citizenship, you can fake a driver's license, and there are people on the market out there who will buy these fraudulent IDs, and so that's the first thing you can use data for. The second thing is you can use sufficient data to gain access to financial institutions. A lot of your banks, if you phone them, will ask you for security verification questions. If you have enough information on your victim, you can pretend to be them, can make changes to the account, can pay out into your own account. So there's a way to get money just from harvesting data from a breach.
In which ways does cyber insurance or insurance mitigate these types of risks presented by this new information age?
Insurance has a key role to play in mitigating losses away from an insured's bottom line. No one can afford to take a loss, whether it's money being taken out of their accounts or someone suing them because they failed to protect information in their care. Even the business interruption costs, which they're not focused on too much, but for me that's where one of the biggest risks lies on. When you have a breach into your system, something like a ransomware virus such as WannaCry can cripple a business and make sure it doesn't trade for days, if not weeks. Of course, then the business loses all the money in between there. Now, the cyber policies are really diverse, they're comprehensive. They pay for your first-party losses, such as business interruption. If you have to hire people to fix your networks after they've gone down, they cover you in case someone sues you because the data has been stolen, as well as many other things. But cyber insurance specifically helps mitigate all those losses, which would otherwise be borne fully by the insured, away and onto another party, so the insurer. When we look at the losses which happen, they grossly shadow the premiums paid. So you can pay a very small premium per year and have a massive amount of cover available for when these losses do happen. What we see is that they don't happen regularly, but when they do happen, they are huge losses, they're astronomical, and no company can ever really survive that. So it's a great way to transfer that risk onto insurers, which helps the smaller companies. Specifically in Africa, our economies are built on the SME market. Those companies could not afford to survive this by themselves. So insurance is a great way and a good component of comprehensive risk management.
Speaking of SMEs, in your experience, do you find that most entrepreneurs and SMEs are aware of the risks that currently exist?
People seeing that they could be vulnerable. In most cases, when you come to insurance, whether it be cyber or whether it be anything else, everybody has a it won't happen to me mentality. So our job as broker is to go through and sit with them and say to them, well, this is the reality, this is the kind of thing that is happening. At the moment, not that many people are insured for cyber. So to say this was a claim or that was a claim, we only really have the information that hits the news or that we become aware of. As people become more aware of it and start taking insurance more, we will then be able to have more realistic stats for them.
Are there particular geographical locations or industries that are more vulnerable to cyber attacks?
It depends on which aspect of the cybercrime that you're looking at. So if it's somebody just wanting to make money, well, they don't really care what industry you're in. They will look at your bottom line. So they will see if you've got money. and that's what they're coming for. So extortion, for example. Data breach, as we said in our talk earlier, it depends on why. So if it's anonymous, for example, hacking into it, so a hacktivist, then they're looking at punishing rather than actually making any money out of it. Then you've got your cyber crime aspect of it, where they would look at somebody that is either an easy target or that has a possibility of paying big money.
Jumping in on that point, the financial institutions such as the big banks, they've got both. They've got money sitting in their accounts and they've got troves of information on all their clients. They've also got the revenue and the funds available to pay the ransom. So on all three fronts, they obviously get targeted. Their saving grace, though, is because they've got the budget, they normally have much better security than your average company in the street. So they might be targeted more, but get affected less often. So hackers have now also started awakening to this fact and are moving their eyes or their gaze away from these bigger institutions, whereas 20 years ago, only banks were being hacked. Nowadays, it's any company, no matter what your size is.
What do you make of Botswana's own Cybercrimes and Computer-Related Crimes Act?
Okay, so full disclosure, I'm not a legal expert, but having a look at it, it does go a certain way in terms of criminalizing cybercrime and these kinds of activities. However, you really need the double side with legislation to not only penalize those who engage in this activity, but legislation to protect the victims of it. So you would need something like a Data Protection Act, which the EU, the UK, and the US have had for decades now. Those kinds of acts which will be able to say that the minimum standards in protecting someone's information are X, Y, Z. And if you fail to comply with that, you're going to get a fine, which immediately encourages people to beef up their security and adhere to these standards. And two, provides a concrete way for the victims to launch successful legal actions against these entities. So without that latter legislation being in place in Botswana at the moment, it does make it very difficult for a victim of a breach to go after a responsible party who didn't have the proper security in place and weren't doing their duties.
It is not every day one gets to use the words innovation and insurance in the same sentence. But our conversations over these past few weeks are clearly indications that there are interesting things happening in this industry. With that, it is a good night from me, Namizo Samakula, and the First Issues team.